Hi, everyone. This is Susan Patrick, and welcome to our February virtual Vision Vantage Point user group meeting. We thank you for joining us today. I know here in Western Pennsylvania, I'm enjoying a very nice blue sky, warm temperatures, but wind that would just blow you right away. So hopefully you guys are sitting there safe and warm and have your beverage of choice as we're going to jump into our meeting for today. So, as you know, I'm Susan Patrick, and today we have Kevin DeWitt, who is going to be presenting on the financial statements. And we do just have that one topic for today, so it's very possible that we might end a little bit early, depending on the presentation and the questions that come through. Again, keep in mind that questions will go in that questions panel. We do not monitor the chat. So make sure you put your questions under questions, and if you can please keep them to the topic of the day, that would be very much appreciated. And as always, please remember to fill out the survey that pops up at the end of the event, or if you have to leave early, when you leave the webinar today. We will have our next virtual user group meeting on March 15th. Still kind of tossing around ideas for topics. So if you make sure you fill out that survey, you will get your voice heard. I do read all those and kind of look at the survey and what people are asking for and try to determine topics that will resonate with the majority. Our next face-to-face meeting in South Central PA in Lancaster is on March 16th. And then we have our next Pittsburgh one. You could tell I had my accent there for a second, on April 20th at Rig Consulting. Oh, that's the wrong slide. All right, as we jump into some of our upcoming webinars for SN as a whole, cybersecurity certainly is a priority for most of us today. So you can join Matt and Phil as they kind of share some of their wisdom on that topic. And then we have an AE Town Hall on February 28th. And then on March 2nd, we have one about outsourced accounting. You know, this is one of those areas that we have a lot of folks kind of taking advantage of with our group. Just kind of helps keep things running on an even keel, and we have experts in various products. So I'm going to kind of jump right in today, guys, and I know you love my polling questions. I only have 2 today, so we'll get those out of the way right out of the gate. So the first question is where do you produce your financial statements? Is that coming out of the system? Excel? Is it a combination? Or something else, or you just don't know? So I'm trying to get my poll pulled up so I can, there you go. All right, so I can see your votes coming in. And it looks like this is pretty interesting. I'm so proud of you guys. It looks like a little over 40% are doing strictly the system. There's a small percentage doing Excel, and then about 50% doing both. So Kaylee, if you want to just share those results real quick for the group so that they can kind of see what the results were. So again, I'm proud to see that a lot of you are doing it directly in the system and some kind of combining in Excel. So our next polling question kind of ties again directly into our topic for today, pertaining to have you used account group tables and group names? So as we kind of see folks jumping in here, got a few people that are going to learn something today that aren't sure exactly what they are. So that's great. There's about 50% or so. Looks like you guys have used it. So hopefully you'll get some tips and tricks here today from Kevin. And then there's a small percentage of you that don't use them at all. So maybe you'll find some application groups and tables. Oh my gosh, I can't speak today. Thank goodness Kevin's doing the presentation because I'm tongue-tied. And it's not contagious, Kevin. You'll be fine. I was vaccinated. I'm not going to share that with you. All right. So without further ado, I think I'm going to go ahead and I'm going to flip this over to Kevin as the presenter, as he'll kind of get into the details. So
Oh.
welcome, Kevin.
What screen do you guys see? Am I showing everything here?
You're showing everything, including, yeah, the slides on the side.
Gotcha. So let's
You're not in
let's do
presenter
monitor.
guided. If you were in somewhere where you actually have multiple monitors, or you're working off of one?
I have multiple monitors.
Oh, look. Okay, well, we're then in the wrong one, so I don't know if you want to grab the other one and push it over.
Yeah. Well, how to do main screen. Which one do you see? Do you just see the PowerPoint?
Yeah,
Sorry.
I just
Sorry
see
for
your,
this.
yeah, the regular PowerPoint one. Kaylee, what's the little trick to flip it? I can never remember.
Yeah, so you're gonna go to where you see the next slide and your notes, and there's a little button at the top that says swap screens, and you can swap screens.
Say that again.
So are you, go from current slide in your ribbon, and it should down right next to the Teams icon from current slide.
Okay.
And then on the screen that popped up with the notes, you're going to then swap presenters or swap presentations, excuse me.
I'm not sure where it shows that, but
Yeah, we'll just deal with it this way. I think we'll be fine,
okay.
Kevin. You're
Yeah,
not going to be in the PowerPoint long either, are you?
I'm not.
All right.
So I'm a little bit. And by the way, I'm in Fort Lauderdale. I believe the weather outside is much better than it is in this hotel room that I've been sitting in the whole day.
Well,
But,
thank you for doing this while you're traveling. We really appreciate it.
yeah, it says out of office on my email today, but we'll make this happen. So today we're going to look at customizing, and customizing may be a stretch, your financial reports using the account groups, names, and account group tables. And I get tongue-tied saying all that, but we'll get through it. So first thing we want to kind of do is, sorry about the slide again. So we'll kind of go over what they are, where they are, why you might use them, and then I'll go into the demo. I do expect we'll end a little early. So what they are. So first thing is account group names. An account group name is basically a label that we will use on your financials. It's a way to organize, group, add your own flavor to the financials. You know, cash and cash equivalents. It's a way to kind of a way to break out of the assets, liabilities, equity buckets. It gives you places to build out more buckets using these names. And again, the account group name, at least to start, is just a label. The account group tables is where we're going to take those labels and put them in clearly a table and assign accounts and or other account group names to those. So this is where we will define what account numbers belong in each of those buckets. Okay. So where do we set them up? Really, they're both set up. Well, they're both available in Vantage Point and in Vision. The difference between the two is Vision, it's under the Accounts Info Center, and you'll see account group names and account group table. In Vantage Point, it's actually under Settings, General Ledger, and again, the same kind of name, account group name, account group tables. So why would you want to do this? I'd say the financials out of the box are, they're okay, I guess, but they're not pretty. By using these groups and tables, we're able to customize the look of your financial statement, add a little more detail, maybe subtract a little more detail, add some subtotals, and again, put your own flavor on it, your own names, your own descriptions. And also, clearly, at the end of the day, you can create financials with different levels of detail. It could be for your bank, owners, audit, just something that's super summarized to hand out to your teams. So, to jump right in, these are sample account group names, and there are really two types of groups. One is a detailed group, the other is a summary group. Not much different on the setup. It's a name and an account type. And if you look down the list, you know, some of these are kind of common: accounts payable, accounts receivable. On the other side, current assets, fixed assets, prepaid assets. You kind of see how it might flow into your financials to give you kind of those buckets of accounts, you know, admin, labor, marketing, you know, things like that on your financials, automobile expenses. So pretty much anything that you can build out. The lower section, again, very similar. The difference between the two when we get into it is that the detail accounts will assign account numbers to, and I keep saying accounts, the detail account group names will assign account numbers to, and the the summary account group names, we will assign the detail. So, and you'll see that on the next slide. So this is a sample of an account group table, and this is using the detailed account group names. So as you see at the top, we have invoiced revenue, and that arrow takes it down below to give us the accounts that are assigned to the invoiced revenue. And on down, work in process would have its own accounts, intercompany revenue would have its own accounts. They all have their own buckets, and these can display either summarized or with the detail behind it. And I'll show that in the next slide, or not next one, but this is an example of using the summary group names in that account group table. So very similar to the one before, except in this case, revenue is linked to all of those account detail groups that were set up before. So very similar. And when we look at the financials, it'll kind of make more sense. What does this do when we assign it? And I just took a brief, you know, an example. So I started with the very basic income statement. I hit print, and this is what came out. So the accounts are broken down by the different account types, so revenue, reimbursables, directs, and so on. After adding a group table to the financials, I probably could have named this a little better, but you see I have revenue. Under my revenue, I have invoiced revenue. I have all the accounts associated with invoiced revenue and a subtotal for invoiced revenue. And then work in process, other revenue. And then once we get to the expenses, I kind of broke those expenses into buckets as well. So you have your reimbursable consultants, your reimbursable other, and still the totals by each of those account types. And finally, you know, the last one all the way to the right, I just got rid of the accounts. So now it's super summarized. There's not a lot of detail there. You still do have the drill down, but you know, it's in that, I don't know, very readable half-page version of a financial. Okay. I might be better at sharing this next screen. So what I want to do now is actually go into Vantage Point. And I'll say again, Vision is very similar. As far as the setup, it's a different place. But from a field by field, tool by tool, it's really exactly the same. You just kind of get a nicer look in Vantage Point. So we'll start with account group names. Again, I didn't give you the path, but under settings, general ledger, and then you have your account group names. As I said before, you'll have a detailed account group and a summary account group. These are just labels at this point, and you'll see we've been in here playing and polluting, but any kind of label that you feel would be valuable, can be added. And if you don't like it, you can get rid of it as well. To add a new detail account group, it really is as simple as adding a line, giving it a name, and then defining what group type it is. So cash and cash equivalent is an asset, and I'll just add another one, say notes payable, current, can't spell, it's liability, and might as well add notes payable long term. Let's go ahead and add the liability. So not too much to adding a detail group. You really do. Again, you name it, you specify the group type, and with summary groups, it would be very similar. So if we stayed on that kind of payables, you know, current liabilities might be an example. Very easy to this point. You're really, again, you're creating labels to be used in the next step. So once you've built out all of your labels, be it detail or summary, the next step is actually put them into play, put them in use. So the next step in the process is actually building out account group tables. I'll just leave. Sorry, get to the next spot here. So the account group tables, as I mentioned in the opening, is you do have the option to use detail group and summary groups. You do not have to use summary groups if you don't want them. So detail groups, you can build out and add all the accounts and then not use the summary groups. Once you use the summary groups, you're going to want to capture every one of your detail groups in the summary group. In this income statement, I did use both the detail groups and the summary groups. And the VUGM is a virtual user group meeting. So I went through and I added all of these detail groups in that previous step: invoice revenue, work in process, intercompany, other revenue, and kind of on down the list, reimbursable consultants. I didn't build it out into extreme detail as far as say marketing and automobile, but for each of these groups that were added, and I'll do a kind of a quick new one. So if you're going to add a new group, you do click add new, give it a name, give it a number, all right, and then you start building out that financial the way that you might want it to look. So having a side worksheet is probably a plus, which I actually have right now. So a matter to add detail groups, you really can pick from that big long list that we had before. I'll just do invoice revenue. Follow that with, let's say, work in process. And keep building down the list, adding all those account groups that you want to show on the financials. And we'll just add one more. So you would build this list of detail. Let's just do other revenue. Now I personally don't add the sorting until I've kind of got things at least where I believe that they should be, or at least have the list built out. And then I'll go ahead and afterwards add the sort order. I recommend not doing 1, 2, 3, 4, just in case you miss something. But the sort order is going to be the display order on your financials. Vantage Point will enforce the account type if it's included in the sorting on your financials. So they might not sort perfectly, but as you see, you build out your sort order and kind of work your way across. Now I'll have to save it a little bit and then add the accounts. But I want to point out a couple of things here. You can build in your own subtotals, right? So for each of these account group names, I'm going to specify what accounts make up that invoice revenue bucket, right? And work in process bucket. But maybe I want to have a total that is invoice revenue and work in process. So I could create another label and call it what you will, invoice plus web. But I don't want it to total twice. I don't want it to double up because that was included in there. So that exclude from report total would allow me to add my own subtotal. And I kind of did that in one of the balance sheet examples. So I have, in that example, I have fixed asset, and then I have accumulated depreciation, and then I created a subtotal called net fixed assets. So subtracted the accumulated depreciation from the fixed assets. So, but that's what that box is for. Exclude from total means you don't want to double up on it. If you miss it, it'll definitely stand out. You'll have some financials that don't produce. The show account detail and the group total, you see what by default I have them both set to report, but you can kind of override things. So maybe you want a summarized indirect accounts on your financials, but you want the revenue and reimbursables and direct to always show. So a way to do that is to kind of override the options on the report by saying, no, I don't want any detail to show, or yes, I want it to always show. Right? Typically, if you're going to say yes to some, you're going to say no to others. And then whether or not you want totals or not totals. Okay. I'm going to save this. You cannot add the associated accounts to the individual group names until after you've saved. So it's a little odd there. So, but the next step would be to define which accounts make up invoice revenue. So I'm just using all my build. So I'm going to start with build revenue. These are account ranges. So if your accounts aren't in, say, a range order, you may have to add multiple lines. My work in process is right in the middle of everything, so I need to skip over that. Just go to 403. So I'm just picking accounts from the financials. You can use the drop-down list. And as you work through each of these, you would add that account range. I don't know what work in process is. By default, Deltek believes that all of your general ledger accounts should be included in each of these tables, or at least the test believes that all accounts are going to be utilized in these tables. And I'll show you what I mean in just a second. I would build out a table for your income statement. I'd build out a table for your balance sheet. And I say a table could be multiple tables for each of those. And as you work through this, when you get all of this built out, the test setup is actually going to look and verify that every account has been included in this table. Now, because was building this out for the financial or for the income statement, I really would have only cared about the 4s through the 850 to build this out. So you do want to make sure all the accounts are included. Especially the balance sheet. You don't want to get a tolerance on your balance sheet. You also don't want to represent your income statement being a little different. Now, if you forget an account in this table, I said it wouldn't show. It will show. It'll just show in a bucket called Other at the bottom of each group. So you're never really going to leave something out, as much as it may not be in the section of the financials where you want it to be. So once I'm going to kind of move over to the summary group. So once you've built out your detail group, assigned all the accounts, if you choose to do the summary groups, it's on the next tab, and it kind of follows the same logic. Add a summary group. I kept it simple. Just say revenue. Add another summary group, reimbursables. And then again, finish out the financials, assign that sort order, and then once it's saved, that is again where you would start assigning the detailed groups. So I had, did I have invoice revenue, and work in process. I don't know whether I built out intercompany. So again, I would try to get all of those detail groups assigned to the summary groups, and then you can also do the test setup, and it'll tell me I'm missing other revenue from this group. Okay. I'm not going to save it. We'll go look at this income statement, or this one. So this is the one I built out for this presentation. So I did use those similar ones. I took it down to this, and I think I purposely left out one account, 770. So we'll see if 770 has any balance when we attach this to the financials. A quick look at the balance sheet table. This is the one where I added in a net fixed assets, not in totals. And you see I clicked exclude from report totals. I don't want to show any account detail. That's pretty important. It would have shown all the accounts in this had I not clicked that box. And then I do want it to show whatever the group total is, because that's the purpose of this. And you'll see my assets start at 150. My depreciation or accumulated depreciation ends at 165. There's no limit to the number of accounts, account group names, or account group tables that you can have. Just like anything though, keep it to what you need. So now that they're built out, the next step is actually put it into play. So I think half the people are already using account group tables, so they kind of have a feel for this. Reporting's in a different place in Vantage Point, so if you're still on Vision, reporting it's its own section. In Vantage Point, reporting is under My Stuff. And I'll hope for the best with this internet here. So I'm just going to go run an out of the box. Let's reset it, make sure it's out of the box. An out of the box income statement. I don't like that color, so we'll pick this color. And I don't want group subtotals. I'm just going to run it. And if it spins a little longer, I have a copy down below. So this is the untouched income statements right out of the box for 2005, June. Revenue, reimbursables, so on, directs, same title. So if I want to use one of those tables, this is a little tip. I'm going to pick that income statement group table that I put together. Now, when you assign this, for some reason, it does put it as part of your sorting and grouping, but it puts the group under the account number. So you would get, your financials would look a little odd. You'd have an account, then the group, another account, then the group. So you will want to come back to the sorting and grouping, or sorry, the columns and groups tab, and move account group above account number. So just putting that table that I created in place and rerunning the financial. So only thing that's been put in place is really adding that table. And this is where I'm now getting kind of that breakdown of 1, those are my summary groups, and then 2, these are my detail groups. So you'll see that the invoice, revenue, work in process, and kind of so on down the list are all broken out by those groups. I didn't put a lot into the indirects, but indirects is where I do see a lot of value, again, with marketing, automobile expenses, office expenses, to try to get those into kind of readable sections on your financials. I went big picture, but you see legal and financial, travel, depreciation, they're all there. So it is a way to get those nice, clean, kind of bucketed financials. And now I'm just, really the next step, I'm just going to remove the account number and run it again. So now the first use of those tables actually extended this income statement by adding all those labels and subtotals. This one, now that I've removed the accounts from the list, I do have more of a consolidated financial, just showing me the big pieces of the financials. So invoice, revenue, work in process, other revenue, and kind of on down the list. Often this is probably something that maybe you would hand out to a group versus, truly account numbers, debits and credits type information. Pretty simple, pretty easy. Again, build the table, assign the table, change the color to 87 CEEB, that's the one I always pick, and save these as a favorite. I did the same thing to a balance sheet. I'm not going to go through assigning it. Probably could have looked at it. But this is the balance sheet with those. And it is actually, no, yeah, it is. What I wanted to show here is this the balance sheet where I added those buckets for current assets, receivables, prepaid, and then the unbilled. And then this is the fixed assets, accumulated depreciation. And this line right here, this net fixed assets, that's the account group I added and said do not include it in the total. So that is taking the 280,000 in fixed assets and subtracting from it the accumulated depreciation and getting your net assets. So you could use these totals throughout this report if you had a need. I used them a lot in my prior company to add totals, subtotals. Same thing would apply if we really want to shrink this down and just have those big bucket items, or remove account number from our sorting and grouping, run this report again. So really taking it down to the bare minimum from a financial. So this is kind of a short and sweet, adding these tables, assigning to the financials, and then saving as a favorite. It's as easy, as easy as that. I hate to say. I knew we were going to run a little short, so I thought I would add a couple of things in that I see from other folks that want a little bit different breakout on the financials. One,
Absolutely, Kevin. And while you're getting ready to key that up, because I know we're on there, we've gotten a lot of questions on where I think we're going next.
Okay.
But I guess maybe if you can verbally address this question, it's kind of hard how to type an answer. But I know often we get folks asking, well, what if you want to reclass it? So let's say you have something that is a liability, but you want it kind of combined with the assets.
It will allow you to do that. It may fight you, but it will allow you to do that.
Okay.
So I think an example that that I've seen is maybe the intercompany stuff, intercompany AR and intercompany AP. You don't do consolidations, but you want that to net to zero. You can include those both in a detail group, be it an asset or a liability, and put them both into that account. And it may tell you not to. I don't remember. I haven't done it a long time, but it does allow it. So you are reclassing it, and the other expenses as well. If you have the other accounts, you can move those up into the expense accounts, or truthfully move expense accounts into the other bucket. It's perfectly okay. It'll handle it.
Awesome, thanks. And I think where you were going next with the office item, maybe, is that where you're going, Kevin? Gotten a lot of questions. Yeah, awesome.
Okay. So the question was, how do you separate by office?
Office, division, department, yeah.
Okay, good. So the way that you can separate, and in my example, I use offices, by the way, but you can use calculated fields to divide your financials by office. And I have one listed, so we'll just look at the settings. So you start with your basic financial statement, and then you're going to use calculated fields that can be set up in the report, or they can be set up in settings, calculated fields. I don't even remember where they are. Well, that's not where they are, but you set them up in settings. So if you set them up in the report, they kind of reside in the report. They're not in the system. They're not available for everyone to use. If you set them up in configuration, they would become part of all reports where they're associated with, and then they would be available to other employees to use, depending again on security. So I've already added a few. So what I did is I took the sample database. I know there's an office in Boston, San Francisco, DC, and then there's a corporate office, and then a current amount. So we'll just look at Boston first. So to break your financials out by office, you just use the fields that are available to you. So, and I'll create one in a second. So you give it a name. I recommend putting some kind of signifier when you create your own calculated fields. Not that it would be wrong, but just in case it's wrong, it's not the system, and maybe it's your math. So I named it Boston Current. I put the heading Boston Current. I used the asterisk to signify that I was the one that created it. And the way to break these out as columns is to use a condition. So by clicking the condition button on your calculated field, it opens up these boxes down below. So if you've built out a calculated field before and you don't have that button clicked, it really is pluses and minuses, right? This field plus this field and so on. Once you click the condition, it becomes that if-then kind of statement. So if this is true, then do this, else do this. So in the build out of this calculated field, I selected office, added it to the list, and then I did the equal and put parentheses on both sides, and you use the code from your organizational setup to define what you're looking for. So I wouldn't put Boston in there. I put the BO because in this database, BO is Boston. And then for the next step, I said, what do I want to see if it is Boston? Well, I want to see the current amount. That's how I built this out. Otherwise, I don't want to see anything. So really pretty simple. The kind of trigger is the office is Boston. show current amount, otherwise 0. Now down here, this perform calculation on, that varies depending on what type of calculated field it is. So sometimes you'll see detail, all detail and totals, all detail, and so on. So this is sometimes tough to explain. So I often say, if you don't get what's right, pick the next one down. Now I know what I want is I want each row to do the math, right? Each row in my financial, I want it to execute on that query. And then I want it to sum up all of those lines in that query. If I said all total lines, well, then I'm going to get nothing on the detail. And then in the total, I would have a number. So query is probably the best one. So I didn't change anything. I'll just build one out because I built out San Francisco. So a new calculation, going to add the asterisk. We'll say Boston year to date. I'll use the same label. Turn on use condition. See if I can get some more real estate here. Okay. And I know it's office is what I need. So I'm going to add office. I selected the wrong one. Add office equal parentheses, or not parentheses, quotes, sorry. BO. If it is Boston, I want the year-to-date amount. And if it's not, I just want nothing. This is a glitch in the system that says all detail and total lines. That is not really a value that's available. So once I click on it, you'll see that it's not there. And I'm going to pick each row from query and do the sum up on calculated fields. So you would build out the same one. If you do this in configuration, you can copy. Save you a little bit of time. If you do it on the report, each one becomes a new field and you start from scratch. When you save it in Vantage Point, it automatically adds it to the columns. Okay. And I'll run it. Do not look at the tolerance because there definitely is one. We'll just stick to page 1, that way you won't see it. So here I have Boston current, San Francisco current, DC, looks like no corporate expense. And then I have the total amount that was current. So that was what I was building out before. What I just added was the Boston year to date, and I already had San Francisco year to date available in there. So you can do this by office. As long as it's part of your organizational structure, it's pretty easy to do a pick one, right? If I wanted to see San Francisco and DC, that's a little tougher to do using a calculated field. So if it's not linked by a portion of your org structure, it's going to take a little more work to combine them. If it's truly a segment of your org structure, it's very easy to just pick that, the name of that level of your org structure, do the equals, and then again, in this case, I did BO, SF, DC, corporate, and so on through the system. Any questions on that part, Susan?
No, I don't think so. I think we got those covered previously. I know this is kind of putting you on spot. Do you have any tips if somebody is doing multi-currency and multi-company?
Multi-currency, I'm going to stay away from. Multi-company, multi-company could work the same way. So if we're talking the income statement, it would really apply the same way. Your level 1 being company, you'd be able to reference one of those companies in that formula. So that would be if you wanted your company to be columns. For consolidations, if you're not using the consolidations, this kind of goes back to the other question where you may want to do eliminations just in the financials. A way to do that is what we discussed earlier, is kind of taking your intercompany AP and your intercompany AR and putting them in the same account group. That will make them, ideally, make them net to zero. And then if you choose to not show the actual account, they would never show on your consolidated financials. And of course, you could set up your consolidated financials to take care of that as well. Multi-currency is a rough one because it's multi-currency. You may be able to produce the financials on a currency, and you just need to make sure that you pick the proper currency when you're running these reports. It needs to be in the reporting currency.
Awesome.
Nope, closed way too much.
All right. Well, I hope everyone was seeing your email there. There we go. I hope everyone got maybe some tips and tricks with what Kevin was able to present today. I know that, I'm a big fan of trying to do things as much as possible out of the system. And I know this is, one area that can potentially help create financial statements without dumping them out to Excel or purchasing another tool to do that. So thank you again for your time today, Kevin. I appreciate
I got
it.
one more if you got time.
Yes, absolutely.
Let's do one more. And this one's a little tricky and may not be perfect. All right. Comparative balance sheets year over year. I know I've needed that in the past. A way to kind of cheat the system is to use the custom amounts. And for using the custom amounts, pick a custom amount 1, 2, 3, 4. And what you're doing is you're actually creating kind of the net change in the custom amounts. Even though this is a balance sheet, I'm creating the net change. And that net change that I'm creating is from the beginning of time through the period that I want the balance sheet to end on. All right. So for this comparative one, I did 2001, 2, 3, and 4, and 5 is the year I'm in, so it didn't matter that much. But each one of these year endings, I started with 1987, period 1. So I went all the way back to January of 1987 as the starting point for each of these balance sheets, if you will, these year-end balance sheet. And then you see I took this through 2001 December, 2002 December, 3 December, 4 December. So each one of these being net change being every transaction, it does actually give me the ending balance at the period end. And now, keep in mind this is sample data, so. But doing this, I was, not a whole lot of transactions in there. But I'm able to display balance sheet over balance sheet over balance sheet per year using this method. Now, if you try this, I recommend that you truly go into 2001 and run the balance sheet as of the end of December to make sure that it does work as desired, because I've got some tolerances that would need to be cleaned up. But I've seen this asked for a lot. It's easier than going into 2001, producing a balance sheet, and then doing 2002 and kind of walking it forward. You can put as many, well, not as many, I think you put 13 years side by side if that were your desire. So that's the added bonus. Oh.
All right, awesome.
I'm gonna stop showing.
There you go. Awesome. Well, I think for the most part we got the questions answered today. I think there might be one or two that I may have missed, and if I've missed your question, I'll make sure that we get back to you privately. So again, thank you so much for your time today, Kevin. This was extremely helpful. I hope folks found that helpful as well. And remember, as you jump out today, fill out that survey, and we'll see you again in March. Thank you, everyone. Thank you, Kevin.